Welcome to another session of Business Startup Training. Today we're going to be looking at accrual. Last time we spoke about prepayment, where we actually demonstrate the idea of an expense being paid way before it's due. And now we're going to talk about the inverse of that, where an expense is due but it's not paid. Thus the principle of accrual. Now let's look at the expert definition of accrual. Now, accrual, according to this definition, is an expense, also known as an accrued liability, is an accounting term that refers to expense that is recognized on our books before it has been paid. The expense is recorded into the accounting period in which it is incurred. I mean, all of that is just basically trying to say that the main concept is the expense is due and it is not paid. So that's the main idea. All right. So let's just look at a basic example. So again, we know the ideas are, one, we need to consider what is due for the period and what is paid. So again, we can demonstrate the principle of quarters. So what is due in quarter one is 100, in quarter two, 100, quarter three, 100, quarter four, 100. Altogether, the aggregate of that is 400. Now, what is paid in quarter one is nothing. Quarter two, 200. Quarter three, 50, and quarter four is 50. So the aggregate of that is 300. So what is due to be paid is 400. The aggregate of what is paid for the period is 300. So therefore, we can consider the idea that what is accrued is 100. 400 is due, 300 paid, and so therefore, accrual has to be 100. Now let's look at a basic example, one that actually has an invoice and other principles attached. So Mike needs to pay a gas bill of 1,600. So he's gotten a deal with an energy giant. Okay, your bill for the year is 1,600. All right. So and it is due every quarter in equal installments. So we know the first quarter is 1st of Jan to March, April to June, July to September, and October to December. And what is due in the 1st of Jan is 400, 1st of April 400, 1st of July 400, 1st of October 400. So altogether, what's due for the year would be 1,600, as we mentioned earlier. But what was paid, the 1st of February, 400 was paid. 1st of June, 200 was paid, and the 1st of October, 600 was paid. So the total that was paid is 1,200. So what is due is 1,600. What is paid is 1,200. It means then there is an accrual, which means that there's a part of the bill that has not yet been paid. And that part is 400. So let's look at the ledger of it. So again, we don't have any balance coming from the previous period, so we don't have anything like that to consider. But let's say the 1st of Feb, the bank payment was 400. 1st of June, bank payment 200. 1st of October, bank payment 600. But we know what needs to be paid is 1,600. So what is due for the period is 1,600, and so there is a shortfall of 400, and that we consider to be accrual. And so therefore we have an accrual on the debit side, which is added to the normal of the payments that were made. And then on the opposite side of the accrual gas account, we have the credit of 400. And so therefore, we can bring that forward into the next accounting period. We will actually attach it rather to the current liability in a statement of financial position or balance sheet. Now let's go a little bit deeper because you have theory and practice. So let's look at this further even. So in terms of the 1st of Feb, we would say, let's say we have an invoice there. We'll attach an invoice there. The first invoice is actually the 1st of Jan and it is 400. And so this payment is 400. So it correlates there. So that reconciles. The next payment due is the 1st of April, but there is a payment made in June of 200. So there's one it's late and one is not, and two is not the actual amount. And then the 1st of October, there was a payment of 600. Again, it's slightly a bit more than what was required, but it compensates for the late payment or the lower payment than what was required in the previous one of 200. So the aggregate of that is 1,200, and that which is accrued for the period is 400. And so we can actually attach an invoice to that, because so really and truly the invoice now, initially it started out to be 1,600, but we cannot actually post all of that 1,600 because payments were made for the period of 400, 200, and 600. We can only post the 400 because there are payments made that compensated for the remaining, or that which was the difference rather. Okay, so in terms of the accrual ledger, we would go on the opposite side. So there's an entry there of 400, and on the opposite side, the 1st of October, there's a gas expense of 400. So again, this is going to go forward in the statement of financial position as an accrual, and it's going to be a current liability. So that's the principle there. Now, in terms of Xero accounting software, I didn't have an example that demonstrated clearly, but the main principle is we have the two ledgers. One, the main ledger in question, which actually reflects the expense, and two, the accrual ledger. So we'll have the main ledger and the accrual ledger. So we'll enter the information into the main ledger, into whatever it is in terms of the expense, if it's insurance, if it's rent, whatever it is. And then the other ledger, or the other account, we then also search for it as well. And here it would be and their accrued gas account. And so we'll search for that, and one would be debited and the other one would be credited in that regard. But obviously we need to put in the fact that we've made payments. So we need to enter the information about the payments, and then we need to also reflect the fact that there's an accrual at the end because not all of the payments was received for the period because part of the invoice was not paid. And that concludes the ideas. So we've looked at the two principles. One, we've looked at accrual, and two, we've looked at prepayment. This session we looked at accrual. The previous session we looked at prepayment. I mean, you can actually look for it in the previous video. The main principle in these two ideas is one, we need to consider when an expense is due and when the expense is paid. All right, so that's an important principle. And we need to also consider the difference between that. So if an expense is due and it is not paid, then we have an idea of accrual. If the expense is due and then it is paid way before it's due, we add a principle of prepayment. So that's the idea. I hope you like this and you've learned something. Like, share, subscribe. Thank you.